The stock market's boomerang month has put investors in a bind. Subheadline is, although they long for more clarity about tariffs, investors are nervous about sitting on the sidelines as stocks climb, which I think makes total sense. I mean, again, we were at a point, a few weeks ago where, hey, if the tariff situation didn't change, we were heading towards some pretty ugly stuff with, some pretty solid certainty. The question I think that's out there now, and the piece that I don't think anyone has any great answers on is, look, how much damage was caused to either the U.S. or global economy over the last 30, 40 days? When is that damage going to show up? And does the dropping of the China tariff from 145 down to 30 provide enough of a release in, kind of animal spirits and excitement to offset whatever damage might have been done and keep the economy on a track that keeps it out of recession? I think these are the questions that are being asked. And quite honestly, 3 days after the China tariff drop announcement, I don't know that you have anyone who can say, anything with 100% certainty about this, because we were just starting to get to the point where you'd likely see some of the economic data coming in that would have shown the damage from tariffs. And now you have to weigh that against all these other things. So I think if you're trying to look at this economy and market and be like, hey, where is it going? And you're sitting there going, I don't really know. I think that's a pretty reasonable place to be.
Yeah, what we've seen is a 17% gain from the lows that we hit. I believe it was around April 8th. That was the low period for this year. The S&P 500 is 4% off its February highs, but year to date, if you look at it, we're slightly in the positive. So it has been a roller coaster ride. And like you mentioned, there is no clear path as to what the impacts of the tariffs are going to look like on the U.S. economy. The things that we would track most closely would be the labor market, which we'll talk about a little bit. Inflationary pressure, we got a reading on that yesterday, which didn't show any conclusive evidence of significant tariff impact increasing inflation for the month of April. So it does come back to very much a wait and see approach, and so much so that I don't even think it's a wait and see for next month. It may be several months till later in the summer that we have a clear understanding of what things are going to look like. And there's some of these pieces that we'll cover in the stack today that are making these suppositions that because of the tariffs that have been in place, there's going to be an inflationary impact. It's hard to say if that is going to be the case.
Yeah, so I think, look, here's the thing that I look at now with the economic data. After the April 2nd announcements on tariffs, remember, we hadn't really gotten any of the March economic data yet. We said, look, you need to throw out all of the March data because it doesn't really matter. It's a different world now than it was before. We're sitting here now after the announcement from this Monday, May 12th, and I think you can kind of make a case, not that it doesn't matter, like the data from April and even May, but you can certainly downgrade it and say it's not really as important as what's going to come later this year now, just because the climate has clearly changed again and we don't exactly know how it has. So I think, you're at a point where you're going to have to pay attention to the data, and certainly if it shows any meaningful, broad-based shift in trend in either direction, okay, you sit there and you say this means something. As an example, if we see the next 2 months of retail data after tariffs go, sky high crazy because everyone's saying, oh, great, we don't have to worry about this. We were going to, front load for, tariffs, but now we're going to buy even more stuff because we feel better about our situation. Okay, you could probably say something, positive about that, especially if hiring intentions pick back up and all those kinds of things. You could be like, yeah, Americans feel good about where the economy's going now. On the other hand, if we start to see jobless claims, ratcheting up and you see retail sales puking left and right because, hey, people did actually preload, try to front run tariffs, and now they just don't want to buy as much stuff because they already did, then you could say, okay, there's some weakness here that we, really need to pay attention to, and there's something there. But it's also one where like there's a reasonable case to be made that those are still just like short-term corrections from behavior that had already happened in the first quarter. And hey, maybe you're better off just like waiting to see what the July data shows in August, and you go with that as a sense of, where the economy is starting to settle. This, by the way, is also working with the assumption that, remember, we're over 30 days into the 90-day pause on all reciprocal tariffs aside from China.
Right.
So you get this ticking clock that's going to come due in July. We don't know exactly what's going to happen there. Maybe every country stays at a 10% tariff rate. Maybe some ratchet up. Maybe they all go away. I don't really know what we are going to get. And so there is room for the economic situation to further evolve as well, as it relates to, what you may see over the next couple months. So I think by and large, this is an economy that clearly had, some significant slowdown concerns and some that are probably going to manifest over the next few months, just because I don't think you can go through 30 days of what we went through on tariffs and say, hey, everything's going to go immediately back to how it was before. But we just don't know what the balance is between what's that slowdown look like and how much excitement is there now out there. I don't really know, because talking to different people in different industries, you get all kinds of different answers at the moment.
The severity is something that you cannot gauge. How basically, in effect, we had an embargo on China for that 30 or 40-day period. What type of impact does that have on the supply chain, the availability of purchasing certain goods in the United States, and or how will that translate to potential price increases? All of that is up for debate, and we need to continue to monitor.
So, yeah, it gets you to this piece with, hey, what do investors do as a result of this? And I think ultimately it comes back to the stuff that we've talked about kind of all along over the last couple of months, which is, look, you don't panic and sell everything at the lows, because you never know exactly what's going to come next. If you sold out on April 9th and you said, pull it, like we're calling it, we got to get out of everything, you probably feel pretty dumb right now.
Certainly.
There's a non-zero chance that if you say, okay, everything's recovered, it's time to pile back in, you might feel pretty dumb 2-3 months from now if we end up getting, a bunch of bad economic data that the U.S. economy can't overcome. I'm not saying that will or won't happen. I'm just saying you never know, and that's why making these binary decisions, sell it all, buy it all, just based on what the market is doing, those are not good decisions. Emotional investing, whether it's out of fear, greed, or any other emotion that you may have, hunger, don't invest when you're hungry. Like, if you feel yourself making emotional investment decisions, you're doing it wrong either way. And I think that's what I come back to on this. So if you're looking at this right now and you're like, man, the S&P has rallied 1,000 points off its bottom, did I miss the boat? Do I need to pile in right now? I don't think those are healthy questions to be asking yourself.
No.
I think if you're someone that's that swayed by price movements in the stock market, you need to really think about, either A, finding a way just to like detach yourself from it, whether it's, hey, again, there's different ways you can do this, like, hey, I'm giving my investment account passwords to my spouse. They're going to handle it so that I can't, do anything. So that, like, if I get emotional, I can't go and just trade it. Or do I want to hire someone to manage this for me because I can't do it? Like, these are conversations that you need to have, because there is no world in which investing emotionally is going to produce good outcomes for you. It's just not. And so when I read this piece about, you've had this, boomerang month, did you think this market was just going to go all one way, either up or down this year? Because if you did, you've kind of been off sides there.
You could have said if the tariffs had stayed in place that you could have made the argument that it would continue to trend that way, but the policy has changed rapidly, so it's ever evolving.